In this video, I want to chat a little bit about the interest rate changes that we saw in Canada this past week. On September 7th, the Bank of Canada met and they decided that they're going to do a 75 base point increase to the key interest rate. That brings the key interest rate up to 3.25%. As we combat inflation, the inflation for June was our peak at 8.1%. It is declining. We now see inflation around 7.6% for July. Hopefully August is down a little bit more as well. We know that the Bank of Canada meets 2 more times before the end of the year, October 25th and December 6th. Experts are expecting at least 1 more rate increase, most likely 2. As long as inflation continues to decrease to a target of 2%, we will start to see these rate increases slow down or stop altogether, which will hopefully happen in the next couple of years, but it's hard to predict. When we talk about affordability and how this is going to cost a consumer on their mortgage, the average rate went from about 4.7 to 5.45%. For every $100,000 you have loaned on your mortgage, that's about $42.83 per month increase to those payments. So your monthly payments on a $100,000 loan will go up $43, on a $200,000 loan, $86, and so forth. I'd say about budget an extra $50 per month per $100,000 you look to get a loan. Based on these numbers, the average affordability is down about 6 to 7%. So you look at, what you'd get approved for, or if you were to budget a specific amount, that purchase price of that property will be down about 6 to 7% to stick within budget or within what you can be approved for. We all know that the COVID rates weren't here to stay for very long, and let's be honest, I hope everyone got a chance to take advantage of the 1 and 2% interest rates that were available. A close friend of mine got one under 1.5%. I would be very happy. I actually just purchased a rental property prior to COVID. My interest rate was 2.69. The interest rates dropped by about an entire percentage point after I closed on my property. So I was a little disappointed to miss out, but hey, you know what? I'm happy with 2.6%. But with anything in life, there's always ups and downs. And my philosophy when buying a home is we're all going to have a mortgage for the majority of our working lives. So, that could be 30, 40 years for most of us that we're going to carry a mortgage. So we really have to understand, we're going to see those high interest rates, the low interest rates. We might get lucky and get 2 low interest rates in a row on renewals. I'm willing to bet that most people see a high interest rate and a low interest rate in their lifetime. So I think it's important to budget yourself so that you can afford a higher rates, or, if a lower rate comes, you think like, oh, it's money in the bank. Maybe you can take a little savings and put it away for a rainy day. So I think just preparing for everything is important, and that's why I think you should discuss, like, with your agent and with a mortgage broker especially, what can you afford and what should you be prepared for when we talk about rates. Think about it. Historically, interest rates since the 80s have been relatively high compared to where they are now. Our interest rate has only eclipsed rates we saw in about 2005, 2006, I think. And those rates were far more higher. We had rates over 6-7% for mortgages for years. I do want to touch briefly on what that means for Calgary. That's where I do most of my business, and the inventory is still relatively low. We're still seeing a seller's market even with rates increasing. There's a lot of noise about this is going to slow the housing market down. It's going to slow the housing market down, and it has a little bit. But we're still only at about 2.24 months of supply, and that's significantly lower than when you see a balanced market or a buyer's market. In a balanced market, we like to see about 4 to 5 months of supply. Buyer's markets, you kind of exceed that 4 or 5 months of supply. Seller's markets, you're under that 4 months of supply, where right now we're at 2. So we're still seeing a seller's market. We're still seeing properties sell within days of listing. So as far as market conditions go, we need more inventory before our real estate market slows down. And I'm pretty optimistic that Calgary is such a great place to live. I hope our real estate market stays strong and consistent, but it's almost impossible to predict at this point. So we'll see what happens in the next year. So just a quick recap, there's going to be 2 more meetings by the Bank of Canada, October 25th and December 6th. So keep an eye out for those dates and see what their interest rate decisions are. They'll discuss where inflation is, where they want it, what kind of path are they on, are we going in the right direction. I suggest getting a pre-approval if you're considering buying a home in the next few months. Get a rate hold for 120 days or something. Help protect yourself for those rate increases in October and December, because you never know what they'll be, and I'd hate to see clients lose out on the potential of getting a lower interest rate. As further changes are made, I will definitely post some updates, but this is a quick update just about the recent interest rate change and how it might affect the average consumer.